Hey everyone, and welcome back. You know, I love a good deep dive into trading wisdom, and today we're doing something a little different.
Oh,
We're going off the beaten path a little bit.
okay. I'm intrigued.
So we're going to be looking at Jack D. Schwager's Unknown Market Wizards,
Okay.
and it's a book packed with insights from these kind of under-the-radar traders who are just absolutely crushing it in the markets.
It really is a fascinating collection of stories.
Yeah, and that's what I love about Schwager's work, right?
Yeah.
He always has this knack for finding these hidden gems.
Yeah. These are traders who are incredibly successful, but just fly under the radar.
Totally. And the best part is, right, like these aren't your typical Wall Street hot shots
No.
with, the fancy degrees. We're
Yeah.
talking about, a former bellhop.
Right.
We're talking about musicians, like people from all walks of life who have somehow figured out
Yeah.
how to make this whole trading thing work for them.
It's true. And you know what I find really interesting is that despite their very different backgrounds, they all seem to share certain traits and principles
Okay.
that contribute to their success.
Let's get into some specifics.
Okay.
Who are some of these unknown wizards that really stood out to you?
Well, Peter Brandt is a great example.
Okay.
He's been in the game for decades using classical chart patterns.
Chart patterns, some people might think that those are outdated,
Yeah,
but he's clearly proving them wrong.
definitely.
So what's his secret?
Well, Brandt has this incredible ability to adapt.
Okay.
He's taken these classic patterns and found ways to apply them in today's faster-paced markets.
Interesting.
So he focuses on shorter-term setups with clear horizontal boundaries
Okay.
to get those really clear signals.
So it's not just about blindly following those old rules.
Yeah.
It's about understanding the logic behind them
Yeah,
and then adapting them to today's market conditions.
exactly. And Brandt lives
Yeah.
by this principle. Strong opinions,
Okay.
weakly held.
Okay, I like that.
So you enter trades with conviction, but you're always ready to change your mind quickly if the market proves you wrong.
No ego allowed.
Exactly.
You got to be able to get out of the way.
Absolutely. And Brandt himself learned this the hard way.
Oh,
There was a period where trading became a real drudgery for him.
wow.
He lost his passion,
Okay.
and his performance tanked.
Interesting.
It really highlights that enjoying the process, finding that spark,
Yeah.
it's just as important as having a solid strategy.
Totally. If you're not genuinely excited about what you're doing, it's hard to, put in the work and stay focused.
Absolutely.
Okay, so we got adaptability, we've got passion.
Yes.
What other traits are we seeing in these successful traders?
Well, let's talk about Jason Shapiro.
Okay.
He's known for his contrarian approach, which is all about going against the crowd.
Contrarian. Okay, I'm intrigued.
Yeah.
So how does he find those contrarian opportunities?
Shapiro uses the Commitment of Traders report,
Okay.
or COT report for short.
COT report.
It's a weekly report that breaks down the positions held by different types of traders in the futures markets.
Got it.
Big speculators, commercial hedgers, and so on.
Okay, so I'm guessing he's not looking to see what the majority of traders are doing?
Exactly.
Yeah.
He looks for moments when large groups of traders are heavily positioned on one side of the market,
Uh-huh.
what we might call crowded trades.
Okay.
He believes those moments often signal a potential turning point.
So he's essentially fading the herd mentality.
Right.
That's a bold move, but it sounds like he's not just blindly betting against the crowd.
No, not at all. He has this great saying,
What is it?
I can trade right off of CNBC.
I can trade right off of CNBC. What does that mean?
What he means is that he actually uses popular sentiment,
Okay.
like what's being talked about on financial news channels, as a contrarian indicator.
Interesting.
If everyone's screaming buy, he's looking for reasons to sell, and vice versa.
Interesting. But wouldn't that be incredibly risky?
It can be.
What if he's wrong and just ends up catching the tail end of a move?
That's where his discipline comes in.
Okay.
While he uses sentiment as a starting point,
Yeah.
he always waits for market confirmation before actually entering a trade.
So he's watching for price action.
Yes.
That supports the contrarian view.
Precisely. And this approach has clearly paid off for him.
Okay.
There's this great story about Shapiro making a significant profit while on a 3-week vacation in Africa,
Wow.
completely disconnected from the markets.
That's the dream.
Right?
To have a system that works so well that you can just step away.
It really speaks to the power of patience
Yeah.
and avoiding overtrading.
Yeah. Sometimes the best trades are the ones you don't take.
Absolutely.
I'm starting to see some common themes emerge here.
Oh, yeah.
Adaptability, discipline, patience.
Yeah.
These are all, crucial qualities for any trader, regardless of their specific approach.
Absolutely. And these themes become even more apparent as we explore other traders in the book.
Okay.
Take Richard Barg, for instance.
Okay, let's hear about Richard Barg. What makes him stand out?
Barg specializes in event-driven trading, primarily in the currency markets.
Okay.
He analyzes things like major economic announcements,
Okay.
geopolitical events,
Uh-huh.
looking for opportunities created by these events.
So he's not just looking at charts. He's
No.
factoring in real-world events
Yeah.
and how they might impact the markets.
Right. And what's interesting is that he specifically seeks out trades with what's called an asymmetric return risk profile.
Asymmetric return risk. That sounds a bit technical.
Yeah.
Break that down for me.
Sure. It basically means he's looking for trades where the potential reward is significantly larger than the potential loss.
Okay.
So even if he's wrong a certain percentage of the time,
Mm-hmm.
the big wins will more than make up for the small losses.
That makes sense. It's like stacking the odds in your favor.
Exactly. And Barg has some really insightful advice on managing missed trades.
Oh.
He tells this story about missing out on a big trade because he was running a simple errand.
Ouch. I bet that one stung.
It did, but it taught him a valuable lesson.
Right.
He realized that having a reliable system for monitoring the markets and executing trades is crucial.
So even with a great strategy, you need the operational side of things to be solid.
Absolutely. And Barg also emphasizes the importance of adapting to changing market conditions.
Okay.
He doesn't believe in being married to any single approach.
So you can't get stuck in your ways. You have to be flexible and willing to adjust your approach.
Exactly. For example, during the Brexit vote,
Mm-hmm.
everyone was focused on the British pound,
Yeah.
trying to predict how the currency would react.
Yeah, makes sense.
But Barg saw a better opportunity in U.S. Treasuries.
Interesting. So instead of riding the roller coaster of the pound, he found a less volatile way to play the same theme.
Exactly. He recognized that a Brexit win would likely push investors towards safer assets, like U.S. Treasuries, and that's exactly what happened.
Okay, I'm seeing a pattern here.
Yeah.
These traders are all about thinking outside the box, adapting to the situation,
Yeah,
finding opportunities where others might miss them. It's pretty inspiring stuff.
it really is, and we've only just scratched the surface.
Well,
There's so many more fascinating traders to learn from in this book.
that's perfect because, I can't get enough of these stories, so let's keep digging.
All right, next up we have Amrit Saul.
Hold on, before we jump into the next trader, you mentioned that there are a lot of common threads that run through all of these success stories.
Yes.
Can we unpack those a bit more?
Absolutely. One of the most important takeaways is the importance of finding a methodology
Okay.
that fits your personality and your risk tolerance.
Right. There's no one-size-fits-all approach to trading. You have to find what works for you.
Exactly. And another crucial element is having a well-defined trading plan.
Okay.
Clear entry and exit rules,
Yeah.
specific risk management parameters, and so on.
Yeah, you can't just be flying by the seat of your pants. That's
Yeah.
where emotions take over.
Yeah,
And that's usually a recipe for disaster.
got it. And along those same lines, risk management can't be an afterthought.
Okay.
It needs to be baked into your strategy from the very beginning.
So you're saying you need to know exactly how much you're willing to lose
Yes.
on any given trade before you even enter the market.
Precisely, you have to protect your capital.
Protect your capital.
And speaking of changing conditions, we've seen how adaptable these traders are.
Uh-huh.
That's a key takeaway as well.
Okay.
Being willing to evolve your approach as the market dictates.
Yeah, no one can predict the future perfectly, so you got to be flexible and adjust as needed.
Right. And perhaps the most important lesson we've seen so far
Yeah.
is the value of discipline and patience. These traders avoid impulsive trades and stay focused on the long game.
Patience really is a virtue,
Yeah.
especially in trading.
It is.
It's so easy to get caught up in the excitement and just, make these rash decisions.
Absolutely.
Okay, so I've got adaptability, discipline, a solid trading plan,
Yeah.
effective risk management. What else?
Well, all of these traders are dedicated to continuous learning.
Okay.
They're constantly analyzing their trades, looking for ways to improve and refine their edge.
So it's not a set it and forget it kind of thing.
Yeah.
It's an ongoing process of self-improvement.
Exactly. And that's what's so inspiring about these unknown wizards.
Yeah.
They're not superhuman. They're just ordinary people who are committed to mastering their craft.
I love that. Okay, so now you mentioned Amrit Saul.
Yeah.
Let's dive into his story.
Okay.
So you were going to tell me about this Amrit Saul.
Yes, Amrit Saul is a fascinating trader.
Yeah.
He refers to himself as a unicorn sniper.
A unicorn sniper.
Yeah.
Okay, I'm officially intrigued.
I think it perfectly captures his approach.
What does that even mean?
It means he's incredibly selective.
Okay.
He's not interested in chasing every potential trade
All right.
that comes along. He's patiently waiting for those rare, high-conviction opportunities with massive profit potential.
So quality over quantity.
Exactly. He compares it to hunting.
Mm,
He'd rather wait for a unicorn than waste time and energy chasing deer.
I love that analogy.
Yeah.
So how does he identify those unicorn trades?
Well, Sal combines a deep understanding of market dynamics with a keen eye for emerging trends.
Okay.
He's looking for those situations where multiple factors align to create a truly exceptional opportunity.
It sounds like he's very patient and disciplined,
Oh, absolutely.
which seems to be a recurring theme with all of these successful traders.
Patience and discipline are essential for any trader,
Yeah.
but especially for someone like Sal, who's waiting for those rare, outsized opportunities.
Absolutely. Okay, so we've got the unicorn sniper.
Yes.
Who else should we be learning from?
Well, Dolgi Dollywell's journey is a great example of adaptability and continuous learning.
Okay.
He started out as a purely technical trader, but realized that he needed to incorporate a broader understanding of fundamentals and macroeconomics to really excel.
So he didn't limit himself to just one approach.
No.
He was willing to evolve his strategy as he gained more experience.
Exactly, and he credits a lot of his growth to diligently keeping a trading journal, meticulously analyzing his trades to identify strengths, weaknesses, and areas for improvement.
It seems like journaling is another common habit
It is.
among these successful traders.
It definitely is. It's such a valuable tool for self-reflection and improvement.
Yeah.
It forces you to be honest with yourself about your trading and to learn from both your wins and your losses.
Totally. I'm starting to see why I love these deep dives. So much wisdom packed into these stories.
Yeah, and each trader brings a unique perspective to the table.
Yeah.
For example, John Netto
Okay.
emphasizes the importance of understanding the prevailing market narrative.
Okay, the prevailing market narrative. So what does that mean?
He's always asking himself,
Uh-huh.
what story is the market telling itself right now?
That's an interesting way to think about it.
Yeah.
So it's not just about charts and indicators.
No.
It's about understanding the broader context.
Yes,
The forces driving market sentiment.
exactly. Netto looks for shifts in that narrative.
Okay.
Those moments when the market's perception of reality starts to change.
Oh.
Those shifts often create unique trading opportunities.
So it's like anticipating those aha moments.
Yes.
Where the market collectively realizes like, oh, we've been looking at this the wrong way.
Right.
And prices have to adjust to reflect the new reality.
Precisely. He's not trying to predict the future.
Uh-huh.
He's simply trying to understand the present as accurately as possible
Yeah.
and to position himself for those moments when perceptions shift.
Okay, this is making me rethink my entire approach to trading.
Yeah.
These unknown wizards are full of surprises.
They really are. And speaking of surprises, are you ready to hear about a trader who made his fortune in the seemingly impossible world of penny stocks?
Penny stocks, you mean those super volatile,
Yeah,
often
yeah.
sketchy stocks
Ah.
that most people wouldn't touch with a 10-foot pole?
That's the one.
Okay.
But Jeffrey Newman has a remarkable story.
Okay.
He built his wealth by identifying those hidden gems in the penny stock world, companies with explosive growth potential.
Uh-huh.
And he did it using a surprisingly simple approach.
Okay, I'm all ears. How do you pull that off?
He focused on trendline breakouts as his primary entry signal.
Okay.
He'd identify promising new sectors, find companies within those sectors
Uh-huh.
that were showing strong upward momentum, and wait for a decisive break above a key trend line
Okay.
to signal a potential buying opportunity.
So he wasn't just chasing random penny stocks.
No.
He was looking for companies with a real story, a reason to believe that they might actually take off.
Exactly.
Yeah.
And here's the key to his success: strict risk management.
Okay.
He knew that even in penny stocks,
Right.
where the potential rewards can be huge,
Yeah.
minimizing losses is crucial for long-term survival.
Yeah.
So he was quick to cut his losses if a trade didn't work out as expected.
That makes sense. You can't let a few bad trades just wipe out your entire account.
Right.
Especially when you're dealing with volatile stocks like penny stocks.
Exactly. Do you have any specific examples of how Newman found those winning trades?
Yeah, like how did he actually put this into practice?
Well, his success with 3D printing stocks back in the early days
Right.
is a perfect example.
3D printing was the next big thing.
Everyone was talking about it.
Everybody was so excited.
Investors were piling into these companies.
But I also remember a lot of those companies kind of fizzling out pretty quickly.
Exactly. And that's where Neumann's discipline and risk management really paid off.
Okay.
He was able to ride the wave up,
Uh-huh.
capturing a significant portion of those early gains, and then exit before the bubble burst.
So he wasn't trying to predict the long-term winners. He was simply playing the momentum
Right.
and managing his risk effectively.
Exactly. And his story with Organovo, a bioprinting company,
Okay.
is another great example.
Mhm.
He actually visited the company's CEO,
Wow.
saw their technology firsthand, and came away incredibly impressed.
So he wasn't just staring at charts all day.
Yeah.
He was doing his homework,
Yeah.
getting a real-world sense of these companies.
He believed that understanding the story behind the stock
Mm-hmm.
was just as important as understanding the technical setup.
Okay, so we've got trend line breakouts,
Yes.
risk management,
Yes.
on-the-ground research. What else did Neumann do that really impressed you?
Well, his story was Sponge Tech, a company that made sponges with built-in soap, is pretty wild.
Okay, this is what I'm talking about. I love these stories.
He noticed unusual insider buying activity,
Okay.
which often signals that something big is happening.
Mm-hmm.
And then he actually bought the product himself to test it out.
Wow, talk about a hands-on approach.
Right. And then there's this crazy anecdote about him being on safari in Kenya
What?
when he got a message on his BlackBerry that Sponge Tech was going parabolic.
Oh my God.
He ended up making a huge profit on that trade.
That's incredible.
Yeah.
It's like he had this amazing intuition about
Yeah.
which companies were going to take off.
Well, I think it was more than just intuition. It was a combination of careful research, technical analysis, risk management, and a willingness to trust his gut when he saw something special.
Okay, I'm starting to see a pattern here. These traders all seem to have this ability to find those hidden gems. Those companies that are about to explode onto the scene, it's pretty remarkable.
It really is. And while penny stocks might seem like a risky and unpredictable world,
Yeah.
Newman's story shows that with the right approach,
Uh-huh.
it's possible to find incredible opportunities even in the most unlikely places.
This is making me rethink my entire approach to investing.
Yeah.
I mean, maybe I should be paying more attention to those smaller, lesser-known companies instead of just focusing on the big names.
Definitely worth considering.
Yeah.
But remember, Newman's success didn't happen overnight.
Right.
He spent years honing his skills,
Mm-hmm.
learning from his mistakes, and refining his approach.
Okay.
And he was incredibly disciplined about managing his risk,
Yeah.
which is crucial for any trader, regardless of what type of stocks they're trading.
Yeah. So it's not just about finding those hidden gems. It's about having the skills, the discipline, and the risk management to capitalize on those opportunities.
Exactly.
Okay, we've covered a lot of ground here with these unknown wizards. What are some of the key takeaways that stand out to you? What are the big lessons that we can learn from these successful traders?
Well, one of the most important lessons is the importance of finding a methodology that truly fits your personality and your risk tolerance.
Okay.
You can't force yourself to trade in a way that feels uncomfortable.
Right.
You have to find an approach that you genuinely believe in and that aligns with your individual strengths and weaknesses.
Right. There's no one-size-fits-all approach to trading. What works for one person
Exactly.
might not work for another.
It's about finding what resonates with you, what feels right.
Yeah.
Exactly. And once you find that approach, it's crucial to have a well-defined trading plan.
Okay.
You need clear entry and exit rules, specific risk management parameters, and a system for tracking your trades and analyzing your performance.
You can't just be winging it.
Right.
You need a roadmap, a set of rules
Yes.
to guide your decisions.
Absolutely. And along those same lines, risk management can't be an afterthought.
Okay.
It needs to be baked into your strategy from the very beginning.
So you're saying you need to know exactly how much you're willing to lose on any given trade before you even enter the market.
Precisely, you need to protect your capital.
Protect your capital.
Right. And another key takeaway is the importance of adaptability.
Okay.
Markets are constantly changing, so you can't get stuck in your ways.
Right.
You need to be willing to evolve your approach as the market dictates.
You have to be flexible, open to new ideas, willing to adjust your strategy as needed.
Exactly. And perhaps the most important lesson we've seen from these traders is the value of discipline and patience.
Oh, okay.
They avoid impulsive trades and stay focused on the long game.
Patience really is a virtue, especially in trading. It's so easy to get caught up in the excitement and make rash decisions.
It's true. And these traders understand that success in the markets is a marathon, not a sprint.
Yeah.
They're in it for the long haul, and they're willing to put in the time and effort to achieve their goals.
Oh, okay. So we've got adaptability, discipline, a solid trading plan,
Yes.
and effective risk management. What else?
Well, all of these traders are dedicated to continuous learning.
Okay.
They're constantly analyzing their trades, looking for ways to improve and refine their edge.
So it's not a set it and forget it kind of thing.
Well,
It's an ongoing process of self-improvement.
exactly. And that's what's so inspiring about these unknown wizards. They're not superhuman. They're just ordinary people who are committed to mastering their craft.
It's incredible, isn't it?
Yeah, it's amazing to see how these unknown traders have achieved success using such a diverse range of approaches.
Right. It really challenges this idea that there's only one right way to trade. These stories really highlight that success in the markets is more about, finding a methodology that fits your personality.
Absolutely.
Fits your risk tolerance, your unique circumstances.
It's not just about finding the right strategy.
Right.
It's about having the discipline, the patience, and the commitment to continuous learning to execute that strategy effectively.
They've shown us that it's possible to achieve extraordinary things in the markets,
Wow.
even if you don't come from a traditional finance background,
Right.
or you don't have access to some, secret insider information.
Exactly. These are ordinary people
Yeah.
who have achieved extraordinary results through hard work, dedication, and a willingness to think differently.
I always like to wrap up these deep dives with kind of a thought-provoking question,
Yeah.
something for our listeners to really ponder.
Right.
What's that one big takeaway that's really stuck with you from all these stories?
It's interesting. We've seen how these seemingly ordinary individuals have accomplished the seemingly impossible in trading.
Yeah.
And it makes me wonder, what impossible trading goal could you set for yourself armed with these insights?
Wow, that's a powerful question.
Yeah.
It's like they've shown us what's possible.
Exactly.
And now it's up to us to define our own version of success.
Precisely, what limiting beliefs might you be holding on to that are preventing you from achieving your full potential in the markets?
Yeah.
What if you approach trading with the same level of creativity, discipline, and determination as these unknown wizards?
It's a real call to action.
Yeah.
These stories have given us a glimpse into what's possible.
Yeah.
And now it's up to each of us to take those insights, turn them into actionable steps towards achieving our own trading goal.
Exactly. And remember, the journey of a trader is never truly finished.
Right.
It's a continuous process of learning, adapting, and refining your approach.
If you're feeling inspired to dive deeper into the world of these unknown market wizards, I highly recommend checking out Jack D. Schwager's book.
Yeah.
It's packed with wisdom and actionable advice and just incredible stories that can really transform your perspective on trading.
It's a must-read for anyone who's serious about taking their trading to the next level.
All right, knowledge seekers, that's a wrap on our deep dive into unknown market wizards. Remember, the markets are always evolving, but the principles of success, they remain timeless.
Keep learning, keep adapting, and never stop pursuing your trading goals.
Until next time, happy trading, everyone.